Hello and welcome to this edition of Insights from the PM's Desk. I'm Justin Plouffe, Deputy Chief Investment Officer for Global Credit at Carlyle. Today, I have a special guest with me, Lauren Basmadjian. She is the co-head of our global liquid credit business and the head of our U.S. CLO and structured credit business. Lauren, thanks for being here.
Thank you for having me.
So you've been a market participant in liquid credit for more than 2 decades. Can we just start with the basic question, what is liquid credit?
So liquid credit is anything tradable. You could buy it or sell it at any time. And at Carlyle, we specialize in below investment grade corporate credit, mostly in loans and CLOs. Loans are first lien senior secured to large corporate borrowers, and oftentimes we buy these loans into CLOs. To do so, we issue 12-year long-term locked-up financing at tighter spreads than we lend to our companies at, and that produces a really nice equity arbitrage for our investors.
And this asset class has actually seen tremendous growth during your career. Could you talk a little bit about how big the opportunity set is?
Sure. So when I started a little over 2 decades ago, the CLO market was about $100 billion, and now it's $1 trillion. Even since the financial crisis, it's tripled in size, and it's sort of mirrored the growth of the loan market. So now the loan market is about $1.4 trillion. CLOs buy about 2/3 of loans out there, and one of the reasons I think it's grown so well is the performance over time. Loans have only had 3 negative years in the history of the asset class. So it makes it a really stable asset class to lever in the CLO structure, especially given all the diversity of borrowers and industries.
So today, what is your overall high-level view of the state of the corporate credit markets?
Well, it's certainly more challenging from a fundamental basis. We're seeing more dispersion in the performance of our underlying borrowers. So for first lien bank loans, for example, again, you're secured by the assets and the cash flows of the company. These are large corporate borrowers, not CCC, not distressed. You could be paid 8, 9, 10% right now on a first lien basis. And you could earn over 15% current income in that asset class today.
And that's really unusual for a credit product to show those kind of potential returns. Are there any particular sectors that you're most focused on these days?
So on the positive side, we are still seeing consumers spend on experiences, leisure, entertainment, travel. Those companies are still growing sales and EBITDA. Where we're more cautious are certain areas that saw COVID bumps, especially if their capital structure was designed around inflated EBITDA. And we're also seeing companies have trouble passing on labor in some instances, especially if their contracts don't allow them to pass it through quickly. So areas of stress in the loan market right now would include healthcare services, where they saw massive wage inflations in their employees, but their payer base is not accepting that all.
Okay. And last question, what are you most excited to invest in today's market?
Well, again, first lien senior secured loans, close to 10%,
Yep.
Pretty rare. CLO equity really benefits from volatility in the market. So you get prepayments back at par, and then when the market's volatile, you could buy assets cheaper with larger coupons, but you have this long-term locked up financing that's not changing, and you're never a forced seller. So over the long run, I think CLO equity is actually still really important because you're getting those high cash flows, and you have the optionality in this volatile market. And of course, CLO BBs, this is a rare entry point to make equity-like returns.
Right. And Carlyle, the second largest manager of CLOs in the world, and has been investing in CLOs since before the financial crisis. So a core competency for us. Thanks so much, Lauren. Really appreciate your time. Thank you all for tuning in, and we will see you next time on Insights from the PM's Desk.